Assalamu alaikum ji, and good afternoon, everybody, for joining the third session of our live webinars series um, uh, hosted by IGI Holdings. I wish to thank all of you who have taken your time, out of your precious, engagements and have joined us for this session. Um, um, you know, just a little bit of housekeeping rules initially, as we always go through. The moderator in this particular case, the expert who's going to be running the show with us or the webinar with us, Mr. Jamshed Hussain, will be engaging with all the panelists on the areas of focus primarily for the property insurance. As audience, you are you have the flexibility to submit your questions online via the Zoom messaging tool. Any of your questions will be viewed by the subject expert, and he will be choosing certain questions based on the time that we have. The slides and the recordings will be available for the session just after the session is over, and can be viewed offline anytime of your convenience. And in case you come across any technical difficulties, you are requested to reach out to the Zoom Help Center, since we are using Zoom's facilities. So just quickly a recap on where we are today. We are in the third session, Alhamdulillah. The first series of the live webinars is being hosted by IGI Holdings, covering a wide area of topics of mutual interest between us as insurers and our audience, yourselves as customers, as partners, as stakeholders. And we wanted to sort of share with you our experiences in this challenging time of the pandemic. So today's session is for property coverage, where there'll be a discussion on the lessons learned and the industry's likely response to the various client queries. The panel will also look at some of the suggestions made by SECP to the industry, and the discussion will also try to cover any changes that we can foresee coming in from the reinsurer's perspective with respect to the property treaties. So going into the streaming platforms, as always, we are running live from Zoom, from Facebook, LinkedIn, and YouTube. Feel free to join our session from any of these streaming platforms. I would now introduce you to our subject expert, Mr. Jamshed Hussain. He will be leading the conversation today. He heads our property, casualty, and commercial business under the banner of IGI General Insurance. I welcome Mr. Jamshed Hussain for this session and hand over the conversation to you to take it forward for the benefit of the audience today. Thank you.
Thank you, Numan, and thank you very much, everyone, for joining in. I'm really thankful to the panelists. A brief introduction: we have with us Khurram Ali Khan Saab. He's a star player in the industry. For the last 24 years, he spent his most of his time in EFU, and now he is heading a broker, a changed role, a difficult role. So inshallah, he'll be the star again in this sector. Arif, he has spent most of his time in Saudi, but he worked for NICL, Jubilee, and Adamji briefly. For the last 7 years, he is in Saudi Re, heading. He is a director facultative for property and casualty. So we'll be asking him questions as a reinsurer. Ruban, he has spent most of his time in Saudi market, Middle East market. He's more of an intellectual when compared to us in Pakistan, and very learned underwriter, and will be having his comments on different aspects of this topic. Ahsan Jamal, mashallah, he has spent years on risk management in downstream power, cement, complex industries. So we'll be having his comments on risk management side of this topic. So we'll a brief introduction of where we are today. So with this COVID-19 starting in Pakistan in March, but starting in China in November, December. So we have a health crisis. This is the biggest crisis after Spanish flu in the last 100 years. Economic crisis. We have now a depression throughout the world. Pakistan's economy is under contraction, first time in the last 60 plus years. Financial crisis, most of the banks in the world, central banks in the world have intervened. As you know, in Pakistan, the government has given financial aid to most of the industries. So looking at the industry, you will see that the biggest industry we have who are hit by this COVID environment is oil and gas, air and travel, banks, insurance. We have low sales in Pakistan and throughout the world. The retail, high tech, and pharma industries were not hit as much as we were expecting. In Pakistan, in the last 4 months, you see that the KSE, Karachi Stock Exchange, Pakistan Stock Exchange went down by 30%, but now recovered. Now it is operating at around 16% down from the 31st December position. So you see that most of the industries are performing below the market average. Oil and gas hit, banks, automobile is in trouble. There is no sale, not a single unit sold in April for this industry. So we'll start the session. So with this environment, most of the business were closed or curtailed, or they were having lost sales and revenue decline during this environment. So we were having different questions coming in from the clients in respect of business interruption and even physical damage coverage under the property policy. So we thought that let's have a brief discussion on what is covered in property policies and what is not covered. In Pakistan and in the region, in Pakistan specifically, 90% of the policies, property policies sold are fire policies. So in fire policies, you see, you need to have a destruction or damage or physical damage by fire or allied peril. So allied peril means that you need to have a flood or a earthquake or fire or lightning to have a coverage in the policy. LM7 wording is popular in the Middle East and throughout the world. This is an all-risk wording, and it needs again accidental physical loss, destruction, and damage. CMI policies, Munich-Re CMI policies are used in Pakistan for complex risks. So they need again sudden physical, which could not reasonably be foreseen. Manuscript wording, these wordings are used by the brokers for complex programs, but these policies again define loss or damage as direct, sudden, unforeseen, and physical, accidental physical damage. So going through this slide, it means that for all, mainly all policies covering property, you need to have a physical loss or destruction or sudden physical loss or accidental physical loss. So COVID environment didn't cause any accidental or sudden physical loss. So you cannot have a loss covered under your property policy. The second question arises, so if you don't have a physical loss, does your policy covers your business interruption because you have a loss of profit during this couple of months of lockdown? The policy is loss of profit in consequence of loss, destruction, or damage indemnifiable under the fire policy. So you need to have a loss covered if you have a destruction or damage under the fire policy. So if you don't have a loss or destruction, you don't have cover for loss of profit. Without any loss, destruction or damage, you don't cover loss of profit. CMI policy again, it defines again that you need to have a material damage section, loss or damage indemnifiable under the operational material damage section. So if you don't have any loss or damage which is covered under the material damage section, you can't have a cover indemnifiable under the loss of profit policy wording. Managed care wording, this again defines coverage as if the property covered is lost, destroyed, or damaged by an insured event not excluded by the policy, and business carried by the insured is in consequence of interrupted or interfered. So you need to have again loss, destruction, or damaged property under the section 1. So both these sections, section 1 property damage section, section 2 loss of profit section, they need to have a physical, sudden, accidental loss to trigger any loss of profit by the client. So the likely responses from us as insurers is that, the coverage question is driven by the policy wording. So you need to, as a client, you need to read or yourself or with your consultants, with your brokers, with your insurers, the policy wording. Each policy wording has different triggers, so you need to see which policy wording you have been using or you have been advised. Traditional policies insured physical loss or damage, and they need to have a necessity to trigger a response under the policy. So physical loss or damage you need to have. Possible contaminations, proximity to other contaminated premises, or fear on the part of the public is not a physical loss or damage. So this is the likely responses from the insurers. So these are the 3 slides. So we'll go to the discussion topics, and I'll start my questions with the panelist. Coming to you, Khurram Saab, the first question is there any BI or contingent business interruption coverage available for the insured if there is no if there is no physical loss or damage to the property?
Thank you, Jamshed. Assalamu alaikum. As Jamshed has rightly mentioned, we need a trigger for any policy to pay a claim, and the trigger needs to be an insured event. But before I go into the basics of do we have cover available or not, I just would like to share a small taboo that I've lived my life with, especially in Pakistan. The perception in Pakistan about insurers is that insurers are always ready and keen to collect premiums, but they're not all ready and keen to pay the claims.
Yes.
So that's a perception that I've lived my life last 25, 26 years. And unfortunately, it's such a wrong perception. People think that going on the insurance road is a one-way traffic in which you always go and deposit premiums and never come to collect claims. I have, on the contrary, all my life found insurers to be very liberal in paying claims. So just wanted to clarify that this taboo that whatever exists in our market is wrong, and insurers do actually pay claim, and they pay claims, in my opinion, in a very liberal environment. So coming back to your question in which you've asked, do we have coverage under this DI policy or CBI extension for the insured in Pakistan? Just going a little deeper into the subject, I don't think we have coverage which is clearly defined at the moment, and there's a gray area. Historically, if you go back, there has been a specific endorsement by the name of infectious and contagious diseases on standalone basis. That would have been looked upon for any coverage in that particular area. If that endorsement is not a part of your policy, you are not covered. That can be very specific. in my opinion. If that endorsement is not about a policy, you are not covered. But going back, if somebody has that endorsement and wants to claim, he needs to make sure that, as Jamshed explained, you have a trigger that leads to an event which is covered under the policy. So I believe this answers my question. This answers your question rather, that do we have coverage or not? And before concluding, again, a small perception in the market that we normally have. Insurance contracts are legal documents and they're drafted by top dollar lawyers. And lawyers have this capability of interpreting them any way they want. So if we have a situation in which we have a difference of opinion and we have a lawyer, he can make it payable or he can make it non-payable. I believe I answered your question.
Yes, thank you, sir. Thank you very much. My second question to you will be that what impact on property line you foresee in next 6 to 12 months in the region and specifically in Pakistan?
I have read news and articles and I have had emails in defining the losses that have so far been reported because of this pandemic. And the last one that I read was an email from Lloyd's, which basically highlights that up to $203 billion of claims have been registered in Lloyd's so far. They are defining it as an equivalent of 9/11 event. So if you look at it globally, things are going to change because we have huge amount of losses that have been registered so far. But if you look at it locally in Pakistan, the dynamics is different. As again you mentioned, Pakistan is not a very risk-averse society. The insurance penetration in Pakistan, unfortunately, is very low. Insurance is only bought when it is lenders driven. I have seldom seen people or clients who buy insurance on their own. In fact, I will throw a question to the audience and I will ask them how many of them have household insurances at this point in time with themselves. And I'm sure not 10% of the audience who are present right now would come up with a yes answer. So we are only looking at insurance when we have some threat or we have some need. And both of these drivers come from the lenders. They threaten you and they create the need. So insurance is driven by them. If looking at it in terms of numbers, the fire and light peril policies or the all-risk policies or the VI policies in comparison are very, very few. And if claims which are relating to these policies in Pakistan in my opinion will be very far and few. The Pakistan market will not have a swarm of claims like the international market, in my opinion, under the current scenario. But things will change. Things will change because all the insurers in Pakistan will be renewing their treaties, majority of them by December. And when they will go for the renewal of the treaties, they will be buying, number one, expensive treaties, and they will be buying treaties with exclusions. So at that point, the customer in Pakistan will face higher premiums and limited coverages.
Thank you, sir. Thank you very much. Coming to you, Arif, after this pandemic, as reinsurers and close contact with the London markets, what changes do you foresee coming from the reinsurers?
Assalamu alaikum, everyone. Thank you very much, Jamshed. You've already very well explained that the standard property market wordings, they do not cover pandemics or infectious diseases. Even though from April onwards, what we are witnessing is that reinsurers are applying exclusions to exclude any loss, damage, or expenses related to pandemics or infectious diseases. There are different wordings used by different reinsurers at the moment. Specifically on the facultative side, infectious disease exclusion is applied on almost all the contracts now, unless an extension is specifically bought with the agreement of the reinsurer. Generally, reinsurers are not very keen to grant such an extension at the moment in view of the huge exposures and the difficulty in pricing such exposures. However, I believe we need to keep in mind that theoretically speaking, standard property insurance, which actually originated from fire insurance, intends to cover only physical loss or damage to the covered property and any resultant business interruption loss. So any BI loss without triggering the material damage section of the policy were not intended to be covered and not priced as well in the premium charge. On the treaty side, we have seen in the recent 1st April renewals in Japanese, Korean, and Indian markets that such exclusions are applied in some form or another in majority of the contracts. Lastly, I would like to say that risks like pandemics are considered fundamental risks as they affect large population. So this theoretically makes them, if not uninsurable, difficult to insure. But as we know now, there are exceptions where insurance products are available for some fundamental risks. We may see in future new products made to cover losses originating from infectious diseases and pandemics. But definitely this will come with a price. So I hope this answers your question.
Thank you very much. Thank you, Arif. Coming to you, Asan. As a client advocate, what will you be telling your client in respect of risk management, and what should client be looking to improve on their premises during this pandemic-like situation?
So, Assalamu alaikum, Jamshed. Thank you for the question. In my view, as the risk landscape of most of the organizations have been changed dramatically because of this COVID-19 situation. And I think it's time for the organizations to reassess their risk management strategies. I'm categorically explaining here about the complex energy and power risk here. And for this, London Market Association has recently published one of the risk engineering questionnaires, and would specifically target for those plants whose operations are directly affected by this COVID-19 situation. So this particular questionnaire, which I'm just discussing here, is basically used by the underwriters, risk engineers, and as well as clients. The primary aim of this questionnaire is to ensure that if there is any changes in the normal plant operations, then definitely there must be some risk associated with these type of changes. And clients need to ensure that these type of risks can be addressed adequately. So basically there are 4 areas of concern by the insurers, and I think the client needs to address these 4 areas. The first one is your plant status. Like I just mentioned, if there's a COVID-19 situation, so clients need to address or assess how the plant operations are affected by these COVID-19 situation. It means they need to address about the production rates, how there is an impact on their feedstock, raw material, and the product line distribution. And if there is some sort of temporary shutdowns, then these type of risks needs to be addressed by the insured or client. Another important area in this particular questionnaire is about operations and manning. Like client need to address or need to know how their permanent or contractual staff are affected by this COVID-19 situation. And the third most important area is inspection and maintenance area, because there are some critical maintenance and inspection activities which are deferred by this COVID-19 situation at plant sites. And I think it's very important for the plant team, or at least the client, that they need to assess the condition of their plant if these type of critical maintenance and inspection activities are deferred by this COVID-19 situation. And obviously they need to know about the availability of the spare parts that needs to be delivered to the sites in this type of situation. And the last important area is management of change. So it means client need to know how this type of management of change procedures can be managed in this particular pandemic situation. So I think these are the 4 key areas which needs to be addressed by the client, and insurers are very much concerned about these 4 areas with respect to risk management in their plant. So I think that's answer my question.
Thank you, Ahsan. Coming to you, Khurram Saab, before going to the next question, very pertinent comments by Ahsan on the maintenance and schedule inspections and maintenance by the client on complex risks. So, what is your comment if the renewal is due in April, May? What advices you will give to the customer, and how the coverage will be arranged during this environment?
Ashton very rightly mentioned this aspect, and it's going to be a very critical aspect, which in my opinion can be the game changer. Insurers always value information and base the coverage and judgment of pricing based on the value or based on the information that they get from the insured or the broker. So if that information is not made available in time, they will not be able to assess the risk. And there's a very small way of measuring a risk. If you have high risk, you have high premiums. If you have low risk, you have low premiums. So if a plant is not able to undertake regular maintenance or annual turnarounds, and we have renewals in April and May and June coming up in a very short period of time, then it's very, very important that all clients and insurers and brokers takes a head start and get engaged right now, so that everybody in the equation knows exactly where is the standpoint. This would give them at least an understanding in terms of timeline that this is something that is not achievable probably today, but can be managed within a window of, let's say, 90 days or 90 days. And based on that, an arrangement can be made. But if it is walking into a renewal without this information, then you should have a problem, and insurers can deny coverage. So the key lies in taking a head start, getting engaged right now, and sharing as much information as possible for all the parties to make a fair assessment and move forward.
Thank you, sir. Thank you very much for your valuable comments. Coming to you, Ruban, do you foresee business models for insurance companies as well as clients changing post-COVID in terms of infrastructure and distribution of business?
I think the easiest answer for this would be that yes, you basically have a pre-COVID situation, and then you have a post-COVID world that we are basically going to be living in. The insurance business in itself, it remains the same. It's dependent on the law of large numbers. It's dependent on contracts. It's dependent on indemnifying insureds. It's, I think, more to do with how businesses will be done that will change, more so from an insurance and even from the client's perspective. What we're doing today, probably we won't be doing 10 years from now. It could be quite different. Simple example, Zoom, the software that we're utilizing today, is valued maybe the same value of 6, 7 top airlines in the world right now. So the change is going to happen, and it's just a matter of where it's going to be focused on. So the question really is, what do insurers do about the change that's coming in? I think it has to do with two particular things that they need to keep in mind. One would be to have some sort of proactive communication during this whole process. So, like you have this seminar sessions where you're engaging with clients, you're trying to educate them. I think that's a very good way of engaging with clients. And then similarly, topics that Ahsan was talking about, what kind of things they need to keep in mind from a risk management perspective. You really need to share that information with your clients at the end of the day, and how that really can impact their coverage one way or the other. The other major change that would happen is, again, both from how we're working right now, how we're communicating, how we're able to engage with our clients, how quickly we need to engage with our clients as well. So I think the way of how we are communicating, how we're managing things, that will change quite a bit. In this whole angle, what we really need to keep in mind is that we need to empathize with the stakeholders, both internally and externally. So you have your own employees sitting at their home in a new location, how you're able to engage them and how you're able to get the best out of them. Similarly, from a client's perspective, if you are unable to go to your office, how do you expect your clients to go to their office? Are there certain clauses in your policy that need to be amended, looking at the current situation? How can you assist them in their cash crunch position, apart from discounts that I think would probably be talking about going forward? So in very short, things will change. It will become a bit exponential, but things will change from what we see.
Thank you, Rohan. Thank you very much. Coming to you, Arif, with the regulators asking primary markets in Pakistan as well as throughout the world to facilitate clients in terms of premium payment warranties, what flexibilities reinsurers are providing to the markets?
Yes, Jamshed, I think there is no straight yes and no answer to it at the moment. Reinsurers are generally flexible and they may look at such requests on case-to-case basis. I think I cannot add anything more at the moment, and I hope this answers your question.
Okay. Thank you very much. Ehsan Saab, is there any way we can facilitate customers? How do you convince customers where there is no solution available for their coverage problem?
Yeah, I think that's a good question. In this COVID-19 situation, we have seen that most of the global insurers right now applying two major exclusion clauses in all their renewals and new business accounts. The first one is communicable disease clause, which is LMA 5393. And the second one is coronavirus exclusion clause, which is LMA 5391. So both these clauses are issued by London Market Association. So it means, yes, we can say that still there is no specific insurance related solution for this pandemic situations. But I think there are some non-insurance related solutions available for the clients in order to cater for this pandemic situation. And the one is important one is, I think, pandemic preparedness and response strategies. So in this type of strategy, there are three important steps which clients need to follow. The first step is the planning stage, in which the client needs to identify those potential areas which are directly affected by this pandemic situation. Like, for example, your workforce, your travel restrictions, supply chain challenges, and obviously critical business operations. In the second stage, the client needs, which is a recovery, which is a response stage, sorry. In this type of stage, the client needs to develop some robust crisis management response and strategies in order to counter those risks which are associated with this pandemic situation. And the last strategy, the last step is basically the recovery stage, in which client needs to develop some effective business continuity plan that will definitely identify and protect the critical business operations of the client. And I've seen some big brokers are now providing such type of risk management services or risk uncertainty services for this particular pandemic response plan to the clients. And by doing this, definitely client will definitely counter for this pandemic situation. I think that answers my question. Thank you.
Thank you. Thank you, Ehsan.
Can I sort of request, I just listening to all your conversations,
Yes.
Jamshed, I just wanted to have a quick question or, an observation about claims. I think communication, very rightly so, said so by Rohan and all of you as well, is extremely important. I think the industry, if I understand correctly, is must be experiencing a surge in claims when it comes to business interruption, for example. And while some lines of business like motor may see a decline in claims, the others will be seeing an increase in claims. So I'm sure there would be operational challenges that would restrict the insurers to really reach out to the customers and support them, whether it's a loss adjuster, whether it is setting a time with the occupants or the or the owners of the property. So as IGI, I just wanted to understand from you, Jamshed, have we sort of reviewed and implemented our strategies for this expected surge, and also the challenges that come with the restriction of movement and logistically placing ourselves and the loss adjusters to handle scenarios like that?
Yes, Numan. For the last 7-8 years, as IGI, we have moved from a paperwork environment to paperless environment. So we have a digital platform available in claims to pay and to facilitate customers in these types of cases. For the last 2 months, we haven't had any disruption in terms of paying claims to the client and receiving their intimations. So yes, the claim guys were sitting home, but they were working, they were receiving claims, they were paying claims. We had issues for some period where we cannot send the surveyors to the client premises, but when it started, now the surveyors can digitally load all their reports on our website, and then we can take it forward and pay the claims as quickly as possible. Whether these are motor claims or property claims. So and hopefully most of the markets in Pakistan should be geared up to service client like this.
Thank you so much. Thanks a lot for the clarity.
Yeah, thank you. And I'll go back to Ruban. Ruban, how can we facilitate customers, in terms of claims and premiums in this environment?
I think it would, again, like everyone talked about, it would depend on the policy to policy, how the policy is worded and what kind of extensions are included. But some of the very quick things that, the client can go through with the insurer or with their broker consultant is how the premium clawback situations are under the policy. So for example, if you're a client, you might be expecting your stock levels to drop during this whole scenario. So if you have stock declaration clauses, it might be good to discuss with the insurer and see if there are any refund opportunities that are available. Then similarly, if you had declared, a certain gross profit value in the beginning of the year, pre-COVID situation, your gross profit figure might be quite different today. So it might make sense to review that figure again and see what kind of discounts or what kind of refunds are available for adjusting your business interruption values more closer to what the actual expectations now exist. In terms of claims, what we've done and what we've seen a lot of our underwriting partners do is we've seen them utilize more and more of digital services of even transferring claims to accounts. It's made the process a bit easier for everyone, and people have started accepting digital documents such as the loss vouchers, etc. So again, I think the idea is how much we are able to empathize with our clients during this these times that we have over here, and try to make their lives as easy as possible and our lives as easier as possible during this time. So I think that should answer your question.
Thank you very much. So we have now we'll go to the question and answer session. So let me check if we have started receiving questions. Yes, we have questions. The first question Khurram Saab, with you. Asad Khan Saab asked that, Lloyd Market developed one product sometime back with Munich Re. Would the panel agree that such product is likely to get traction for such pandemic covers if made available in the region in Pakistan? A pandemic type cover product. Sir, your mic is off.
As I already mentioned, Jamshed, anything is required based on the need it creates. I believe at the moment the need is there, and this is the right time for anybody to customize or develop or initiate any such incentives. And if a product, as Asad Saab has mentioned, is available, then the market, in my opinion, is really just a question of how do we project that product in the market. People have very short memories. Today we have this pandemic, tomorrow and move forward, nobody will even remember what this pandemic was. So we have a very short time window in which if we want to move ahead and make sure that people who want this product as a cover available for them, then we should do it on a very fast track basis. Otherwise, 3 months down the road, people will start forgetting. 6 months down the road, nobody will even remember. So yes, I believe it is going to be useful if the product is introduced.
Thank you, sir. Thank you very much.
Jamshed, can I add a few things in this question?
Yes, please, Hassan.
Yeah. So on a market update site, one of the largest broker is working on to develop some new risk financing options protection scheme. And this particular product is sort of a bespoke product, and that will cover both parametric and indemnity trigger. Okay. This product will cover any specific geographies, any specific pathogen types, pandemics. And currently, however, this product is not available right now for this particular outbreak, but definitely this product can be purchased for future events. So there are some brokers who are currently working on developing some sort of this type of product developing, and hopefully we'll have it in near future.
Thank you. Thank you. Another question. Fasih Khurshid Saab has sent one question that, let's say, I'll come to Ruban for this question. Ruban, if you have a delay in startup claim and that delay is aggravated by this COVID-19, what will be the parameter for reinsurers or insurers to calculate or to exclude a loss partially?
It's a very difficult question to answer, and there have been different litigations related to these kind of events in the past as well. So where something has been aggravated not because of the primary cause of loss, but because of a secondary cause of loss. So for this question specifically, the first answer I'd give is, I think Fasih's a broker. First of all, he needs to make sure that the cessation of works clause is not, applied on any of his policies, or he gets some sort of waiver on those policies. On the delay in startup question, it will vary. I think it will really depend on the policy wording. I remember seeing one policy wording where, it was specifically mentioned that, it was for a Pakistan specific case, that in case there's a delay caused because someone could not travel to Pakistan because of visa issues, those days would not be counted, in the BI value. So again, specific policy is what will matter. So that I think should answer his question.
Thank you. Another question from Zahid Mahmood, Arif, to you. As you said, this pandemic is a fundamental risk. Do you foresee emergence of government schemes, government finance schemes throughout the world, or in some markets like terrorism pool or a flood re type of things?
Yeah, I think There may be some markets where the governments will decide to have some pools because the economy is heavily affected, especially in US and Europe. So there might be something in future coming for this, but again, uh, as we see the trend these days, generally governments are relying on the private sector to come to such solutions. And I think ultimately insurance industry will be asked to find a solution and make a product, or even if may not make a product, to help the government to create a pool for this. So I think it's too early to say anything at the moment, but going forward, maybe some countries will decide and some governments will decide that the best way to protect from such pandemic is to create a pool.
I'd just like to add one thing on what Raja is talking about. It's about the industry overall. We've had different kinds of events globally at different stages of time, and the insurance industry has always responded with one solution or the other with whatever the problems that have been presented. So I'm sure one way or the other a solution will be forthcoming.
Thank you. Question to Ahsan. Yeah, the question is, silent risk may have increased in these lockdown days. How much serious is silent risk than normal risk?
Well, that's a good question. From insurer's perspective, there are two main areas that needs to be focused on silent risk coverages, especially in this pandemic situation. Number one is the maintenance and reliability of the fire protection system available at site. You need to ensure that all available fire protection systems, equipments need to be adequately in the working condition in order to cater for any fire risk coverage. And the other important thing is site security, which is another important challenge for the underwriters right now. I've seen a lot of questions coming up from the underwriters, especially for the silent risk coverages right now. So underwriters need to ensure that the site management or the site team must have a robust site security plan available. In case if there is no manpower available, there is no production facilities are not working right now, and the plant is silent. So I think these two main areas are very much concerned about the underwriters these days. The reliability of the fire protection system on the silent risk and the security arrangements. So these are two main areas.
Thank you very much. Another question, we still have time. Another question is, yes, Khurram Sahab, property coverage usually have an unoccupancy clause of 30 days, 30 to 60 days. During this pandemic, are we expecting to see this clause being removed for in the region or in Pakistan for let's say for hotels or in entertainment industry? Sir, your mic is off.
I would be a strong advocate of it being removed, because under the present circumstances, customers are helpless. The clients, the insurers, they're helpless. It is something that has come from nowhere and they can't do anything to change the situation. Clauses are worded under certain environments. The environment that we're facing today is unusual. So I would encourage insurers to have a holistic view and allow that clause to be deleted so that the insureds may have this comfort of knowing that they are not anti-selective.
Thank you, sir. Thank you very much. So that's it from the question answer. Do you have any question, Numan, from your side to the panel? Numan, your mic is off.
So from my side, we briefly brushed over, an enabling environment during COVID-19, and I think it's extremely important to reflect on how the enabling environments, whether it is work from home, whether it is resource pooling, whether it's digital enablement, whatever those functionalities that we have come across during these days. I just wanted to sort of reflect on that and see how on the property side, since this is an area that is of discussion right now, how on the property side are these going to impact any of the underwriting capabilities, or for that matter, do you foresee process efficiencies coming into place when it comes to underwriting, or the administration of what of how to sort of serve your customers? And one more thing attached with that is one thing I picked up from the conversation from, I think, Essen, is around the silent risks of maintenance side. And I think when it comes to the the enabling environment of IoT, the Internet of Things, I think a lot of these Industry 4.0 related initiatives are in play in the industry. So wanted to have your expert opinion on whether you've come across these things or not.
Okay. About silent risk, definitely it's very difficult for the underwriters to underwrite these type of risks because there are very much a lot of challenges available in the silent risk exposure. So underwriters needs to focus on very limited coverages. But there are four main areas which underwriters usually provide covers, like on the flex apparel and to some extent on the net cat exposures. But and the technological wise, there's not so many technologies available for the underwriters. But I think there are some risk engineering expertise available on the digitalization of identifying the risk management areas. Like we have some sort of digital softwares available, like zoom cameras. The drones are very much used by the risk engineers to assess or identify the risk digitally in the remote sites. So I think it's a very it's a very early stage right now for the underwriters and especially for the risk engineers to utilize technology in these particular areas, especially on the side of risk assessment and underwriting such sort of risk silently.
Thank you. Would you like to add anything, Khurram Saab, on that?
Yes, I would like to. My concluding comments would be that, as I already said, people around us have very short memories, and insurance anywhere in the world is transacted on the basis of need. Today we have a need of such a product that can address the pandemic issue. But if you recall the events of 9/11 and the assassination of Benazir Bhutto, both those events created the need for terrorism insurance. If you recall the flood of 2010 and earthquake of 2011, both the events created the need for atmospheric perils. But now if you look back, that need has diminished. It's not that the exposure has reduced. The exposure is still there, but the need has diminished. So what I would suggest, and I would conclude by is that the responsibilities lies with us, the professionals in the insurance industry, be it insurer, reinsurer, broker, that the need is maintained and the product is made available so that whenever something happens, the insured, who are the ultimate objective of the whole value chain, are protected and indemnified.
Thank you so much. Jamshed, your mic is off, I think.
Yeah, sorry, we have a couple of more questions coming in. To Ruban, another question from Asad Saab. Do you foresee further adoption of technology will help not only insurers to rate risk appropriately and to offer best customer service when required, such as in these COVID environment or similar environments?
I think technology will basically, I'll divide that question into three different parts. The way that we are underwriting now, obviously there are certain rooms for efficiency improvements. Now, whatever efficiency improvements that we can do in terms of whatever processes we are following, that can, assist the end process at the end of the day. So that is obviously beneficial from a customer service point of view. The second, I'll divide the property into two different sections. You have your commercial properties and then you have your residential or personal lines property. Now on commercial lines, obviously there are different angles that we need to look at, like Essen was talking about. Can we collect information in a better way by, let's say, utilizing drones or other technologies per se? But there is a lot of scope on the personal lines, which I think forms a very small part of the whole book that we have over here. All over the world, you have new models coming in, either peer-to-peer or other models that make insurance buying much easier. Your customer tomorrow will be a lot of millennials. They buy everything differently. So I think that's a target market that everyone can tap in for, especially the retail lines and personal lines of business.
Thank you. We have 4 minutes. Numan, I think that's it from our side. Would you like to wrap up?
I would certainly like to sort of thank everybody who has joined in. And it's a pleasure to have all of you. And, you've also, from your, engagements, you've taken time. And Arif Sab, you've actually joined all the way from Saudi. So, thanks, special thanks for you, to you as well. Just for the audience, today was the third session, and we covered property related risks and the impact on COVID, of COVID on the property line of business. We do intend to have further sessions that will inshallah begin just after Eid, sometime in the first week of June. And one of the exciting webinars that we plan to sort of hold will be on our leading product line, the Vitality product, which is a health tech product and health related product under the banner of IGI Life Vitality. We expect, we in fact request all of you to take time and join us on those sessions, because again, in these testing times, a lot of things have actually left room for us to sort of review and see how we can reach out to our customers, engage with you guys, and communicate effectively. Last but not the least, I think the most important part for me is my team. I think they are the ones who have created the magic, and I think I need to thank Usman Khalil, Jahangir Nazar, and Madhya Ahmed for being a huge support in setting up these events. The recording of these events will be available offline for you to review at your own leisure. Please do go through it, even if you have joined us at a later stage. Once again, a special thank you to our panelists who have given us great insights for the session today. So with that, I close the session today and thanking everybody for their patience and presence. Thank you so much, and Allah Hafiz you.
Thank you very much, and thank you the panelists, especially Khurram Saab, Burhan, Raj Arif, and Essen Saab. Thank you very much.
Allah Hafiz you. Allah Hafiz.
Allah Hafiz.